Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Jack, why don't we take a couple questions?
Sure.
Where do you think the dollar is going to be 3 years from now? This is Fred. Do you see it being at parity or above? What do you think against the euro?
Yeah, we do. We think the euro's in big trouble. We've never believed in the euro as a real currency. We think it's an artificial creation. One of the problems with the euro is they've tried to link together cultural differences, political differences, with economic differences, and there are big differences. You really need to have a common economic and a common political zone to make a currency. A currency like that work. The U.S. is a common economic and political zone. That's why the U.S. dollar and all the states tend to work together. The euro, the cultures are so different. You have huge political spats. The euro is really designed for Germany in particular, and also for the European banking industry. It was designed for. It's an artificial system, and you can see that in one big way. All you have to do is look at the yields, or at least you had to look at the yields a couple of years ago, and see that Portugal and Spain and Italy could borrow at the same rate that Germany could borrow on the international level. That makes no sense. The system was false. Now the world is starting to price those differences in, and you're seeing the spreads between Portuguese and Italy and Greek bonds, 400, 500, 600 basis points over Germany. That tells us there's risk being priced in the European monetary system. So we actually could see the euro going away. We're not making that prediction, but the probability that the euro is going to break apart is increasing as this global economy continues to spiral down on a lack of demand, again because of the core. It's no longer beneficial for Germany to stay part of the European exchange rate mechanism just because the factors have changed in terms of their exports.
Very good point. Jack, I'm sure you see this question all the time, and I've seen it quite often. Even when I'm talking about options, and I see, and I'm discussing strategies. But Bill has a question, and he says, the U.S. is printing mass amounts of dollars. So, how can you really believe in what you're saying when the U.S. is printing so many dollars? Is it just because it's a relative game, and the other just be bigger losers than the currency?
Well, at the moment, we think that the private sector deleveraging of all the debt that's still out there and all this bad paper that's still out there, the deleveraging of the private sector, not only in the U.S. but globally, is still overwhelming the amount that the public sector or governments are putting out into the system. No doubt, it's a plausible view that at some point, if we get through this morass and we have this massive overhang of dollars, if the Fed doesn't somehow come in and mop up this big supply of money that they continue to pump out there, the plausible scenario of some type of really crack up inflation problem is out there, and it's a real thing that we're open to. We're just not sure yet, because one of the reasons we don't think it's going to be a problem for a while longer than people think. If you look at the rate of change in the consumer price index, 6 month rate of change, we're down to levels now that we haven't seen since the 1930s. We also think because China is going to disappoint, you're going to see final good prices in the world continue to fall. China will get desperate and continue to pump out these exports, trying to maintain some semblance of growth. That's going to be another deflationary factor. And if we get another scare because of a China disappointment, you're going to see more deleveraging in the global economy, which means more supply of U.S. dollar-based credit is going to come out of the system. So for a while, we don't see inflation a problem. We see deflation as a real problem, because deflation crushes those that are over-leveraged, which leads to more deleveraging, which means to more deflation. So we think we're about to potentially get into a really self-reinforcing deflationary cycle. But once we get through this, then the question becomes: is that currency overhang put out by all the governments going to lead to a massive spike in inflation? And we have to be open to that, and we are, but we just don't think it's going to be a problem for a while.
Okay, that makes sense. It's a really interesting one, and I think it sort of plays exactly into what you were just discussing about 20 minutes ago or so. Let me just get the exact question. Sam says, he sees that the Japanese economy is really in trouble because he says the prices are not in line with fundamentals. The strong yen seems to be killing the Japanese economy. And look, in fact, I've read some articles about the Japanese automakers and how they need 105 or 110 dollar yen to be making money here in the U.S. And it's now whatever it is, 96. It seems to be a real challenge for them. What do you think of exporters there in Japan, exporting their goods to the United States?
Oh yeah, I mean the Japanese exporters are getting crushed, not only because of the currency problem. That's number one, but just because they were aligning themselves more tightly with China and expecting demand for China to really lift their exports, which they were doing. They were driving massive exports from Japan into China. But China's imports, which means Japan's exports into China, China's exports have declined dramatically too, which also tells us there isn't a massive increase in domestic demand in China, or you wouldn't see the fall in China imports so much along with its exports. So not only is the strong yen hurting the exporters, but just the evaporation of demand from China and Asia in general. And needless to say, Japan is still an export-driven economy. The fact that the Western consumer has gone into the shell. You have almost three factors that are hitting the Japanese economy like the perfect storm.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.